In the vast and mineral-rich landscapes of Russia, a unique investment story is quietly unfolding, waiting for its moment in the global spotlight. Eurasia Mining plc, a UK-based company listed on London's AIM market, represents a compelling convergence of world-class assets, low-cost production, and profound environmental responsibility. The company holds the keys to some of Europe's most significant deposits of platinum group metals, gold, nickel, and copper, materials that are absolutely critical for the world's transition to a green economy. While geopolitical tensions have temporarily cast a shadow over its market valuation, they've also created what could be a once-in-a-generation entry point for discerning investors who can see beyond the immediate headlines. The fundamental value proposition remains incredibly strong and is poised for a dramatic re-rating. At the heart of Eurasia's portfolio are two flagship projects, each a giant in its own right. The first is West Kytlim, located in the Ural Mountains, which stands as the largest alluvial platinum mine in Europe. This is not a project on a drawing board, it's a fully operational, cash-generative asset that has been consistently producing since 2018. The second is the Monchetundra project on the Kola Peninsula, a massive hard rock deposit containing a wealth of palladium, platinum, and other critical metals. Together, these assets provide a powerful combination of immediate cash flow from West Kytlim and enormous long-term growth potential from Monchetundra, offering a balanced and de-risked approach to resource development that is rare in the junior mining sector. The true genius of Eurasia's strategy lies in its commitment to a low-cost, high-margin operational model. By focusing on alluvial mining at West Kytlim, the company avoids the immense capital expenditure and technical complexity associated with deep underground mines. This translates directly into lower operating costs, making the company resilient and profitable even when metal prices fluctuate. This economic efficiency is not just a business advantage. It's a core part of its identity, allowing it to generate returns while many of its global competitors struggle with declining ore grades and soaring operational expenses. This financial prudence ensures the company can sustain itself through challenging times and expand when opportunities arise. As we stand in July 2025, the investment case for Eurasia Mining is inextricably linked to the geopolitical landscape. The ongoing conflict in Ukraine and the resulting Western sanctions have created a significant discount on the company's shares, masking the intrinsic value of its world-class assets. However, for those with a long-term perspective, this situation presents a unique opportunity. The potential for a resolution to the conflict and a subsequent lifting of sanctions represents a powerful catalyst that could unlock immense value for shareholders. The West Kytlim mine is more than just an asset. It's the engine of Eurasia Mining's current success and a model of efficient resource extraction. Situated in the mineral-endowed Ural Mountains, it holds the distinction of being the largest alluvial platinum mine in all of Europe. Alluvial mining involves extracting valuable minerals from surface deposits, typically in riverbeds and floodplains, which is a fundamentally simpler and less capital-intensive process than hard rock mining. Since commencing production in 2018, West Kytlim has been a consistent source of revenue, producing not only platinum, but also a valuable mix of associated metals, including palladium, gold, iridium, and rhodium. This operational track record demonstrates the company's ability to execute its plans and deliver tangible results, which is a crucial factor for building investor confidence. The scalability of the West Kytlim operation is one of its most compelling features. The mine is not a single pit, but a series of open pit sites spread across a vast licensed area, which has been methodically expanded between 2023 and 2025. This continuous expansion of the resource base ensures a long mine life and provides a clear pathway for increasing production volumes in the future. As one area is mined out, operations can seamlessly shift to the next, creating a steady and predictable flow of production. This model allows Eurasia to ramp up output in response to favorable market conditions or scale back if needed, providing a level of operational flexibility that many larger, more rigid mining operations simply cannot match. What truly sets West Kitlim apart is its remarkably low-cost production profile. The shallow nature of the deposits means that the company can use straightforward earth-moving equipment to extract the platinum-bearing gravels. There's no need for expensive and complex drilling, blasting, or underground tunneling that characterizes hard rock mining. This operational simplicity translates directly into a lower cost per ounce of platinum produced, placing Eurasia firmly in the lowest quartile of the global cost curve. This economic advantage ensures that West Kitlim remains highly profitable, generating robust cash flows that can be used to fund the company's other growth projects without relying heavily on external financing. The strategic importance of West Kitlim, therefore, cannot be overstated. It provides the financial foundation for the entire company, de-risking the development of its other assets like Monchetundra. The cash flow generated here allows Eurasia to pursue its long-term vision with patience and financial strength. For investors, this means the company is not just a speculative exploration play, but a genuine producer with a proven asset that underpins its valuation. The consistent performance of West Kitlim serves as a powerful testament to the management's expertise and the inherent quality of the mineral resources under their stewardship, making it the cornerstone of the entire Eurasia Mining investment case. While West Kitlim represents the company's profitable present, the Monchetundra project on the Kola Peninsula represents its spectacular future. This is a world-class hard rock deposit that promises to transform Eurasia Mining into a major global player in the PGM and battery metals market. The project boasts a massive resource estimate of over 2 million ounces of palladium equivalent, a basket of metals that includes not just palladium and platinum, but also significant quantities of gold, copper, and nickel. This diversification of metals is strategically brilliant, as it positions the company to benefit from strong demand across multiple high-growth sectors, from automotive catalysts to the burgeoning electric vehicle battery industry. It is a project of immense scale and strategic importance. One of the most significant advantages of the Monchetundra project is its prime location and existing infrastructure. Situated in a well-established mining district on the Kola Peninsula, the project is surrounded by essential services. It has ready access to rail lines, paved roads, high-voltage power grids, and nearby port facilities. This is a game-changer in the mining world, where the cost of building infrastructure from scratch can often render a project uneconomical. For Monchetundra, these logistical benefits drastically reduce the required capital expenditure and future operating costs, accelerating its path to production and significantly enhancing its overall economic viability. This built-in advantage gives Eurasia a major head start over projects in more remote locations. The project is fully permitted for both construction and mining, holding a license that covers an extensive 21.2 square kilometers. This is a critical milestone that de-risks the project immensely. Securing all necessary permits can be a lengthy and uncertain process, often taking years and facing numerous hurdles. By having these approvals already in hand, Eurasia has cleared a major obstacle and can move forward with development plans with a high degree of confidence. This readiness to build is further strengthened by a joint venture partnership with Rosgeo, the major Russian state-owned geological exploration company. This collaboration provides valuable local expertise, technical support, and a strong government relationship, which is invaluable for operating successfully in the region. Monchetundra is complemented by the nearby Nitiskumusha Travianaya, or NKT project, another large-scale nickel-copper PGM deposit. The synergy between these two adjacent assets is powerful. Together, they create a mining district under Eurasia's control, offering decades of potential production and the opportunity to build a centralized processing facility to serve both mines. This cluster of assets positions Eurasia as a future powerhouse supplier of the very metals needed for the global green energy transition. For investors, Monchetundra and NKT represent the company's long-term growth engine, a fully permitted, strategically located, and massive resource ready to be unlocked when the time is right. In an era where environmental, social, and governance principles are paramount for investors, Eurasia Mining stands out as a leader in responsible resource extraction. The company's commitment to environmentally friendly practices is not a recent addition but a core part of its operational philosophy, particularly evident at the West Kitlim mine. The alluvial mining method employed there is inherently low impact. It avoids the need for deep underground shafts, extensive tunneling, and most importantly, the use of toxic chemicals like cyanide or mercury, which are commonly used in gold and PGM processing elsewhere. This clean approach significantly reduces the mine's environmental footprint and eliminates the risk of hazardous chemical spills that can devastate local ecosystems. Eurasia's dedication to environmental stewardship extends to its meticulous water and land management practices. At West Kitlim, water used in the washing process to separate the valuable metals from the gravel is managed within a closed-loop system. This means the water is continuously recycled and reused, preventing contaminated discharge into local rivers and streams. Furthermore, the company practices progressive land rehabilitation. As soon as a section of the mine is depleted, the topsoil, which was carefully removed and stored, is replaced. The land is then recontoured and replanted, restoring it to its natural state for forestry or agricultural use. This mine and reclaim approach ensures that the impact on the landscape is temporary and responsible. This green-focused mindset is also embedded in the development plans for the Monchetundra project. Although it is a hard rock deposit, the project has been designed from the ground up to incorporate modern, low-impact mining and processing technologies. The planning phase has prioritized compliance with both stringent Russian environmental regulations and international best practice standards. The goal is to build a mine that operates with maximum efficiency and minimal environmental disturbance, leveraging the latest technology to control dust, manage waste rock responsibly, and optimize energy consumption. This proactive approach ensures that as Eurasia grows, its commitment to sustainability grows with it, making it an attractive partner for ESG-conscious investors and off-takers. This focus on clean mining provides Eurasia with a distinct competitive advantage. As global supply chains increasingly demand ethically and sustainably sourced raw materials, companies that can prove their green credentials will command premium partnerships and market access. Automakers, technology companies, and institutional investors are all placing greater scrutiny on the environmental impact of the metals they use and finance. Eurasia's proven track record at West Kitlim and its clear ESG-centric plan for Monchetundra position it as a supplier of choice for the future. It is not just mining valuable metals, it is mining them in a way that aligns with the values of the 21st century economy. A fundamental pillar of Eurasia Mining's investment case is its position as one of the world's lowest cost producers of platinum group metals. This is not a matter of luck, but the result of a deliberate strategy centered on asset quality and operational efficiency. The alluvial nature of the West Kitlim mine is the primary driver of this cost advantage. Extracting platinum from shallow loose gravels is fundamentally cheaper and requires far less capital than blasting and hauling rock from deep underground. The simplicity of the open pit, free digging operation keeps both capital expenditure, or CAPEX, and operating expenditure, OPEX, exceptionally low, resulting in, very healthy profit margins even during periods of suppressed metal prices. This economic efficiency creates a level of resilience that few mining companies can boast. While high-cost producers may be forced to suspend operations or even declare bankruptcy when commodity prices fall, Eurasia's low-cost structure allows it to remain profitable and continue generating cash flow. This financial robustness is a powerful strategic tool. It enables the company to weather industry downturns, self-fund its exploration and development activities, and avoid diluting shareholder value by having to raise capital at inopportune times. This built-in financial strength ensures the company's longevity and its ability to execute its long-term growth plans without being at the mercy of volatile markets. When compared to its major international competitors, Eurasia's cost advantage becomes starkly clear. The world's primary PGM producers, located mainly in South Africa's Bushveld complex, are facing immense challenges. They are grappling with the realities of aging mines, which require them to dig deeper and deeper to access lower-grade ore. This leads to exponentially higher costs for labor, energy, and safety. Similarly, producers in North America also contend with complex geology and high operating expenses. Eurasia, with its simple surface-level extraction at West Kitlim, sidesteps these issues entirely, giving it a profound and sustainable competitive edge on the global stage. The economic benefits extend to the Monchetundra project as well. While it is a hard rock mine, its strategic location near established infrastructure dramatically lowers the anticipated costs. By leveraging existing rail, road, and power networks, Eurasia avoids the multi-billion-dollar price tag that often comes with building a mine in a remote, undeveloped region. This combination of a low-cost producing asset at West Kitlim and a low-cost development project at Monchetundra creates a powerful economic engine. For investors, this means higher potential returns, lower risk, and a company that is built to thrive in any economic climate, making it, honestly, a standout in the global mining sector. As of July 2025, the most significant factor influencing Eurasia Mining's market valuation is, honestly, the complex geopolitical situation stemming from the Russia-Ukraine war. The conflict and the subsequent comprehensive sanctions imposed by Western nations have placed all Russian-based assets under a cloud of uncertainty. For Eurasia Mining, a UK-registered and London-listed company, this has created a challenging operational environment. Access to international capital markets, which are crucial for funding large-scale development projects, has been severely restricted. This has effectively placed a cap on the company's share price, which currently trades at a substantial discount to the intrinsic value of its world-class assets. The sanctions have created practical hurdles beyond just finance. They complicate supply chains for sourcing certain types of specialized Western-made equipment and limit the company's ability to sell its products directly into premium European and North American markets. Despite these headwinds, Eurasia's management has demonstrated remarkable resilience. Since the escalation of the conflict, the company has successfully maintained its operations, continued production at West Kitlim, and even managed to advance its project pipeline by securing new licenses. This ability to navigate a difficult landscape really proves the robustness of its operational model and the strength of its local partnerships, ensuring the assets remain protected and productive. The current diplomatic climate offers little in the way of immediate resolution. Recent high-level discussions, including those between Russian President Putin and US President Trump, have yet to yield a breakthrough or a ceasefire. President Putin has publicly reiterated his commitment to achieving Russia's war objectives, indicating that a swift end to the conflict is not on the horizon. This prolonged uncertainty means that the geopolitical risk premium attached to Eurasia's shares is likely to remain in place for the near term. Investors must therefore approach the company with a degree of patience, understanding that the full value of their investment may not be realized until the broader political tensions subside. However, it is precisely this geopolitical discount that creates the extraordinary investment opportunity. The market is currently pricing Eurasia based on the political risk rather than on its fundamental strengths, its low-cost production, vast resources, and green credentials. For investors who can look past the current headlines and focus on the long-term potential, the shares offer a chance to acquire a stake in world-class mining assets at a fraction of their true worth. The operational resilience shown by the company provides a solid foundation, ensuring that the intrinsic value of the projects is preserved and ready to be unlocked once the geopolitical environment improves. The ultimate investment thesis for Eurasia Mining hinges on a single powerful catalyst: the end of the Russia-Ukraine conflict and the subsequent lifting of Western sanctions. When this happens, the impact on the company is expected to be immediate, profound, and overwhelmingly positive. The first and most visible effect will be a significant re-rating of the company's share price. the geopolitical risk discount that has suppressed the stock for years would evaporate, likely triggering a sharp and sustained rally as the market rushes to re-evaluate the company based on the fundamental value of its assets. This event alone could unlock multiples of the current share price, delivering substantial returns to shareholders who were positioned beforehand. Beyond the immediate share price appreciation, the end of sanctions would reopen the floodgates to international capital markets. Eurasia would regain access to institutional investors in London, New York, and other major financial centers who are currently restricted from investing in Russian-linked assets. This influx of capital would enable the company to accelerate the development of the Monchetundra project, moving it from a permitted resource to a fully fledged cash-generating mine far more quickly. The ability to secure favorable financing would be transformative, allowing Eurasia to fully capitalize on its vast resource base and solidify its position as a major PGM and battery metals producer on the world stage. Furthermore, a post-sanctions environment would make Eurasia Mining a highly attractive target for mergers and acquisitions or strategic partnerships with global mining majors. Large, established mining companies are constantly searching for world-class, low-cost, long-life assets to add to their portfolios. Eurasia's projects, particularly the massive and strategically located Monchetundra, fit this description perfectly. A partnership with or an acquisition by a major player could unlock value through a significant premium to the prevailing share price and would also provide the technical and financial firepower to develop the assets to their full potential, creating a win-win scenario for all stakeholders involved. Finally, the normalization of trade relations would restore Eurasia's access to premium-priced commodity markets in Europe and the United States. While the company has been able to sell its products to other markets, Western buyers often pay a premium for ethically and transparently sourced materials. Re-entering these markets would directly boost the company's revenues and profitability. The combination of a higher share price, access to capital, M&A potential, and improved market access creates a powerful confluence of factors. For investors, the end of the conflict is not just a hope. It is the primary catalyst that will transition Eurasia Mining from a deeply undervalued opportunity to a recognized global mining leader. Eurasia Mining is not just a precious metals company. It is fundamentally a green energy metals company. The specific commodities within its portfolio, platinum, palladium, nickel, and copper, are the essential building blocks of the global transition away from fossil fuels. This strategic positioning places the company at the very heart of the decarbonization megatrend, one of the most significant and enduring economic shifts of our time. Demand for these metals is not cyclical, it is structural and set to grow exponentially in the coming decades. By holding large, low-cost reserves of these critical materials, Eurasia is perfectly positioned to supply the industries that are building our sustainable future. Platinum and palladium are vital components in catalytic converters, which reduce harmful emissions from internal combustion engines, a market that remains significant. More importantly, they are indispensable catalysts in hydrogen fuel cells, a key technology for clean transportation and energy storage. As the world increasingly looks to green hydrogen to power trucks, ships, and industrial processes, the demand for PGMs is projected to soar. Eurasia, with its massive resources at West Kitlim and Monchetundra, is poised to become a key supplier to this burgeoning hydrogen economy, making it a direct play on one of the most promising clean energy technologies. The inclusion of significant nickel and copper resources at the Monchetundra and NKT projects further strengthens Eurasia's green credentials. Nickel is a primary component in the cathodes of high-performance lithium-ion batteries that power electric vehicles. As the global automotive industry shifts from gasoline to electric, the demand for high-purity, sustainably sourced nickel is exploding. Copper, often called the metal of electrification, is essential for virtually every aspect of the green transition, from the wiring in electric vehicles and charging stations to the windings in wind turbines and the infrastructure of the electrical grid itself. Eurasia's assets contain the very DNA of decarbonization. This strategic alignment with the green energy transition provides a powerful, long-term demand tailwind for Eurasia's products. Unlike other commodities that may face uncertain futures, the metals Eurasia produces are mission-critical for achieving global climate goals. Russia is already a major global supplier of these metals, and Eurasia is one of the most promising developers within the country. As the world scrambles to secure stable and reliable supply chains for these materials, Eurasia's low-cost, environmentally friendly operations will become increasingly valuable. Investing in Eurasia is therefore not just an investment in a mining company, it is an investment in the essential raw materials that will power a cleaner, more sustainable planet. Eurasia Mining presents a rare and compelling investment case. Forged at the intersection of undervalued assets, operational excellence, and immense geopolitical potential. The company's foundation is built on solid ground, with the cash-generative and low-cost West Kitlim mine providing financial stability and a proven track record of production. This is complemented by the enormous growth potential of the Monchetundra and NKT projects, fully permitted, strategically located, and rich in the very metals that are indispensable for the global green energy transition. This balanced portfolio of current production and future growth offers a de-risked entry into the critical minerals sector that is difficult to find elsewhere. The company's unwavering commitment to low-cost, environmentally responsible mining sets it apart from its global peers. By employing clean alluvial methods at West Kitlim and designing Monchetundra with modern ESG principles at its core, Eurasia is not only protecting the environment but also future-proofing its business model. In a world that increasingly demands sustainable and ethical supply chains, this green advantage will translate into a significant commercial advantage, attracting premium partners and ESG-focused investors. This, combined with its industry-leading low cost of production, makes Eurasia a resilient and highly competitive player, built to thrive for the long term. The current suppressed share price, a direct result of the geopolitical shadow cast by the Ukraine war, is the element that transforms this from a solid investment into a potentially generational opportunity. The market has temporarily divorced the company's valuation from its outstanding fundamentals, creating a window for long-term investors to acquire world-class assets at a fraction of their true worth. The eventual resolution of the conflict and the lifting of sanctions represent a clear and powerful catalyst that is expected to unlock a torrent of value through share price re-rating, renewed access to capital, and strategic M&A interest from major global players. In summary, Eurasia Mining offers a unique combination of tangible assets, proven production, a low-cost structure, a green-focused strategy, and a monumental, event-driven upside. While the timing of the geopolitical catalyst remains uncertain, the underlying value of the company's resources is undeniable. For investors with the patience to look beyond the current headlines and the vision to see the long-term potential, Eurasia Mining represents a chance to invest in the essential building blocks of our clean energy future at a moment of maximum pessimism. It is an opportunity that is as vast and as rich as the Russian landscapes from which its treasures are drawn.